Welcome back to episode 114. And you're probably the most featured guest, David.
I think so. I've been on, what, 6-7 times?
Yeah.
Maybe a little bit more?
I might have to start giving you a fee. Welcome back. This week is more of an economical topic. That means long time guest, David Belle's back. What's good, David?
It's all good, mate.
How you doing?
Yeah, good. I mean, I've left the city and now I'm just doing my own thing at home, trading and writing a newsletter, trying to help people to trade the right way.
So what's your newsletter called?
Macrodesiac. So it's basically focused towards the macroeconomic side of trading, rather than looking at charts and putting stupid lines across and all of that kind of thing. Yeah. You know, which is what most people tend to do on Twitter and stuff like that. And most retail traders, they like to focus more on the technical aspect rather than
What's the difference between a retail trader and an institutional trader?
So pretty much the size of your account, whether you worked in finance for a specific time and the amount of trades that you've done. Really though, most people have access to the same information, unless you've got a Bloomberg terminal, which is like $2,500 a month.
It's $2,500. I want to know how much it costs.
Yeah, it's roughly that with all the add-ons and stuff like that. So yeah, it's about $24,000 to $27,000 a year.
Random question: if you had access to a Bloomberg terminal, would you think that makes significant difference?
It does. I mean, when I was working as a broker, I had it, and the data that you can get out of it is ridiculous. But also, most people just use it for the chat function. Like, if you wanted to chat to anyone with another Bloomberg terminal in the world, you can just jump on it and just start a chat with them. And a lot of trades are done that way as well.
Okay, of course. Okay, so referring back to Macrodesiac, how long have you been doing this for?
I started it at the end of January.
Yeah.
And so it's about, almost 6 months now, 5-6 months. It's going really well.
Yeah, it is.
Really well. And the feedback as well is, which is the most important thing for me.
You're a machine. I actually can't believe you write that much. Like, when I see you, I'm like, these guys, why don't I have his work rate? You're a machine.
I mean, it's, most of the time it's just ideas pretty much off the top of my head.
Yeah.
And ideas that I think are going to work out well in the longer term.
Yeah.
And actually make some people some money.
Yeah.
Because that's the most important thing in trading.
That's
is the outcome, rather than just saying stuff and then it doesn't really proliferate into anything significant. If people are making money and the subscribers are, that's all that matters to me. Okay,
cool. So quick plug. So where can people get involved with Macrodesiac?
Yep. So it's www.macrodesiac.com. You can look at, there's some free content there that you can subscribe to, send out a reading list maybe once, twice a week. But there's also some other stuff that comes just automatically as well.
Okay, wonderful. Okay, so I had to get the plugs out of the way so people know what you're about. So we're talking the ECB and the Eurozone.
Yeah.
So we hear a lot of stuff about Brexit. So here's decided to talk about part of the Eurozone from a macroeconomical aspect. So David, you can do the honors of describing to the listeners what the difference between the EU, which is the European Union, and the Eurozone.
Yeah, so I just want to kind of base what I'm going to say going forward on the idea that the Eurozone isn't necessarily an economic project. It's been totally a political project.
Yeah.
Okay.
Go on.
It's been founded on centralizing power from loads of different states into Brussels and Germany.
Yep.
Clear evidence for this is that if you look at when the euro was created in 1999 but became actual legal tender in 2002, the German trade surplus literally shot up so much. Like it literally went and skyrocketed. At the same time, there's something called Target 2, which is the basically get a payment system throughout the Eurozone. Okay. Now, Germany is owed 1 trillion euros from the southern European states. Why do you think that is?
That's around 1 trillion euros.
1 trillion euros. It's roughly like 990 billion euros at the moment. And it's purely because it's been a transfer of deficits. So they've essentially put the southern European states into deficit spending nations, and Germany has taken up all of the rest of it. Why do you think everyone talks about German manufacturing being so strong and all of this stuff? Well, because they're the ones that are benefiting. it's not these southern European states. So we're going to go on to Greece and a few other states later, but
Portugal,
if you look at the unemployment in these nations, okay, they've been decimated purely because of Eurozone centralization, which is focused purely towards Western Europe and Germany.
Yeah. So it is, he's not lying, but for listeners, it's not even like it's an agenda thing. Like if you do your own research, and obviously I want to post a lot of articles and links and information in the description. I'm going to try to start giving the sources of what we talk about. So in the Eurozone, there's currently 90 nations that have the euro. And then there's central bank known as European Central Bank, the ECB for short, which was established in 1998. The president, David's best friend, Mario Draghi, and how it's set up in terms of structure and hierarchy. There's 6 members, an executive board, and then of course for each nation has a national governor. So in terms of talking about, you discussed the southern countries in Europe that have basically been decimated. One of the biggest ones that many people may know or may not know is Greece. And don't get me wrong, Greece were at fault. I'm going to discuss some of the areas they are at fault. But what's happened to Greece in the last decade has been pretty tragic in terms of I think they are the country that's experienced the longest period of recession out of any advanced economy, even longer than America and the Great Depression. At one point, they had a 50% youth unemployment rate, 25% unemployment rate. That's 1 in 4, which is bizarre for a European nation. You have things like, at certain points, the banks will say, listen, if you got over 800 euros, you might take a haircut because we just need to survive. There were small humanitarian issues, and hundreds of thousands of Greeks who are well educated have actually left the country due to these issues. So what is your thoughts on Greece, on how it started, and the ECB/Eurozone, however you want to describe it, handling the situation? Yeah,
so I think one thing that people need to get their heads around is that it's not governments ruining wealth. It's not governments creating poverty. It's not governments doing any of this stuff that you hear in the news. It's central banks.
Yeah.
Okay.
And do you describe what a central bank is in case there's new DISUNOMICS listeners?
Yeah, so the central banks basically set the interest rates and they set the money supply in effect via interest rates. If they cheapen money, then it makes it obviously cheaper to lend and borrow. But at the same time, you then get a misallocation of capital because that money becomes so cheap that people just like to just borrow and borrow and borrow and borrow.
Yeah.
Okay. And then if government policy, fiscal policy doesn't match up with the monetary policy adequately enough, then yeah, it exacerbates the misallocation of capital problem even more. The problem that we're facing at the moment is with negative real interest rates. Now, the ECB's deposit rate at the moment is minus 0.4%. That means that if you are depositing money into a European bank, you're automatically losing 0.4% of your money. Okay. And that's without even looking at inflation. And this is also a problem that's happened in the UK. People talk about savings and stuff like that, like especially young people.
Yeah.
They talk about savings a lot. But really, because of the real rate of interest, you're actually losing money if you just keep it in cash. A normal bank. Yeah. Because the bank shows you the nominal interest rate, they don't show you the real rate.
Yeah.
Okay. So this is why so many people are just invested, and this is why stock markets keep going up.
Yeah.
Because there's no risk-free rate of return, i.e. keeping it just in a bank.
Yeah.
So people are just pumping money into just crazy assets, and it just keeps going up.
And of course, when you have cheap money, cheap capital, that you could borrow money, that's also going to inflate asset prices, as we've seen with housing, for example.
Exactly. And that's what we've seen with housing over the last 30 odd years since 1983, when the mortgage-backed security was created. When land was securitized, okay, this is when we saw people, because obviously land is fixed in supply.
Yeah.
Yeah. If you start monetizing land in that way, where you can trade it and you can actually trade mortgages and stuff like that, then yeah, people are going to kind of pump into that asset class.
Yeah, because the nature of the nature is fixed and supply.
Absolutely.
It's always going to be a level of guaranteed return over a period of time.
Exactly. But if we go back to what the ECB is doing at the moment, there's a massive problem in the bond market at the moment where...
Explain to listeners what a bond is.
So a bond is basically, it can be a corporate bond, it can be a municipal bond, it can be a government bond. But essentially what you do is you buy it for the set price and then you receive a coupon for the maturity. So let's say, for example, I bought a 10-year German government bond at 1%.
Yeah.
Okay. I would receive 1% of the price that I bought it for 10 years until maturity, and then receive the principal back as well.
Yeah, so it's essentially an IOU with in the streets we call it a drink on top.
Yeah,
that's
so,
what.
So you basically lend into the government.
Yeah, and you're thinking, of course, the government going to pay us back. It's the government.
Absolutely.
So that's the.
But at the moment, this is the massive issue because I think the market is so distorted in terms of the yields that what if, Germany did decide to leave the Eurozone? What would happen to all those bondholders who have bought German bonds, for example, and, it then just goes totally wrong for them? Because in my view, I think Germany is going to be the first country to leave the Eurozone.
You reckon?
Absolutely. Their target 2 balances, as I spoke about initially, are so big that other countries aren't going to be able to pay them back. Italy can't afford 466 billion euros to pay back Germany with.
Yeah, because even Germany own the majority of Greek debt when I was looking at it. So Germany's...
Yeah, I think a lot of... We'll go on to this as well. The German banks also do.
Yeah.
They've got a massive exposure to...
And private investors in Germany as well.
Yep. And German investors also own a lot of US treasuries as well, which is obviously another issue. So going back to the reason why I think the market is so distorted is that US treasuries, 10-year treasuries... 2-year treasuries are yielding less than Greek 2-year treasuries. That's impossible. Greece is more riskier. Greece is has a much bigger default risk than the US does. So why are yields higher in? Why are yields lower in Greece than they are versus the US? It's ridiculous. It makes no sense. The market is totally fucked up. And, there's going to come a point where there's going to be a reset. I've spoken about this in the newsletter that I write. And I
Macrodesiac, by the way.
I think it's going to come with a massive problem with Chinese deflation and a corporate debt issue as well, which is going to fuck up central banks so much because, if deflation does come, all of these policies that they've had for the last 10 years, QE, low interest rates to try and spur up inflation, it's going to go out the window because it's actually creating deflation
instead
rather than inflation.
So how do you then generate inflation?
Oh, you can't.
You
need to get demand back up. And demand is so flat at the moment. It's really scary. Aggregate demand is just inflation expectations are at the lowest point ever.
So for instance, aggregate demand is when you take your consumption. So that's the stuff the goods and services that we purchase in the economy, government expenditure, investments, and then your balance of payments. So that's your exports. So what you ship out of your country minus your imports. Yep. And so currently, as David said, it's looking pretty, eager, I like to say. Yep. I don't know why every time we talk about macroeconomics on the podcast, it's very depressing. But
because it is. Because the thing is, the thing is that the focus is always on, I think, politics a lot, right? What most people look at is on politics and not what central bankers are doing. I've always said, literally, I think from the first time I was on the podcast, I maintained that I was having a go at central bankers because they're the ones that are wrecking people's lives.
And the thing with central bankers, is that now they've got so much power and influence over what happens, and they're not. And it's not democratic because the people don't vote them in.
They're not elected. No,
they're not elected. Exactly. The people don't vote them in.
So, for example, Christine Lagarde is leaving the IMF.
Yeah, it's actually.
Do you know who the top candidate is to join the IMF?
No,
Mark Carney.
No way.
Yeah.
She's about for the. I don't even know that.
So one guy that wrecked the Canadian economy by keeping rates so low.
Yeah.
Has also wrecked the UK economy and lied over Brexit, over all the forecasts and stuff like that.
No, that must have been external pressure, or he just has a beanie bonnet.
Totally politicized. He's a yes man. I wrote about this yesterday in the newsletter. He's a total fucking yes man. And
because his Brexit, I think I covered it in my autumn statement. His Brexit forecast was so wild and based off such little macroeconomic information.
Yeah.
For the governor of the Bank of England, it didn't make any sense.
Yeah. And Andy Haldan apologised, didn't he? I think it was last January. He apologised for the Brexit forecasting, and on that as well. The reason why their forecast was so shit is because they used the gravity model. So they considered they didn't consider that the world is really globalized now, right?
Which is extremely globalized. That's one of the issues.
Absolutely. So they were saying that trade will falter because France, for example, is closer than China. How the fuck does that make sense? That's literally that is literally their model, the gravity model. That's what they used. The politicians used it. All the civil servants used it. It's ridiculous. You can send a ship over to China that will take maybe a week, okay? Really, really cheap to send export and import goods, right? Or you can fly a plane. It takes, what, less than a day? Yeah? Why the fuck does it matter if you're closer to the country that you're delivering to?
2019. Technology and transportation links are so amazing now. I remember back in the day, all of something from USA on eBay, you don't even know it's going to come. They can get stuff within a week.
And look, before we had specific trade deals with the EU or free trade or whatever, we used to import our lamb from New Zealand, and that was years ago. So why the fuck are they going and reverting back to all these stupid models where they don't actually matter whatsoever in this day and age? Stupid. They have no clue
to manipulate the forecast.
Exactly.
To manipulate
the
opinion of people.
Exactly. And it's not fair because this is how people then are kind of fed such massive disinformation about things. And they become ignorant, or they become, maybe not ignorant, but they become very emotional about certain things rather than actually looking at the facts. And then when they do look at the facts, they're faced with cognitive dissonance and then they get angrier. You know, it's not fair because these are coming from reputable, apparently, people.
And it's difficult. That's why I started DISUNOMICS, and probably why you've been writing since I've known you, actually, to be fair, on LinkedIn and everything. Because you kind of need people to help you filter this information. If you're just, I don't know, the average baker, how are you going to know that Mark Carney's chatting shit about about a Brexit forecast? You know,
Absolutely.
The chairman of the governor of the Bank of England said, Brexit's a terrible idea. Brexit's a terrible idea. So it's mad in that case. So back to Greece. What were we talking about Greece? We're talking about...
So we'll talk about Greece in this context as well. In the fact that I think you mentioned earlier that it was the Greeks' fault as well.
Partially, obviously, because they cooked their books, but so does everybody. Yeah,
well, they did cook their books, but with help from Goldman Sachs. So Goldman Sachs helped Greece hide a shitload of their debt via swaps and different kind of financial arrangements.
Because I was... So if you look at things like 2009, they had like a forecast for I can't remember the exact number off the top of my head, for their deficit. And then the actuals came obviously the year later and it was double what they actually had. But people may be thinking, okay, cool. So a country that's a member of the Eurozone essentially committed some form of fraud. Why didn't anybody come down hard on them? Because Germany and France were also operating in deficits above the required level, and they did not want to put austerity measures on themselves, so they allowed the Greeks to crack on.
Yeah, I mean, not so much Germany. Germany were running a surplus.
But, when I was reading, this is back in 2000.
Maybe pre-Eurozone.
Yeah,
maybe. But Germany's definitely run a surplus since then.
And also, when you look at sorry, hold on, I lost my train of thought. What were we talking about just now? Germany and France and so when you look at what's happened to Greece and you obviously different the interesting thing about macroeconomics is that different countries are different culturally and that also impacts the policies they run. For example, Sweden is different culturally to the United Kingdom. You're going to have two different welfare policies, two different taxation policies.
Yeah.
In Greece, 1/5 of their population is over the age of 65. So what do people over the age of 65 tend to claim? Pensions. So pensions is a very, very important thing. I think pensions is like 17.5% of their GDP, which is higher than any other country in the Eurozone.
Yeah.
And they underfund it by 9%, higher than any other country in the Eurozone. I think the next highest is at 3%. One of the big issues with then when obviously the austerity measures come in, one of the first things, obviously, Germany and Brussels essentially just said, you got to sort out this state pension, which damages so many families in Greece because half of the households in Greece actually rely on it. And I think it's insane how I've never been a fan of austerity personally. I think austerity is terrible. I think it's insane how they impose, well, we know why they impose this level of austerity measures on Greece, but it just essentially just crippled the country they're still fairly crippled, but for like a decade. So what do you think about the actions taken by the likes of the IMF and the ECB in regards to the Greeks?
Yes, I mean, the IMF actually said that the ECB and the EU have gone way too hard on Greece. That was literally what their statement was.
Yeah, they were way too harsh. Do you think, quickly, the Greeks should have just ditched the euro and went back to the drachma? No, because I don't think that they were. I think they did need a bailout in a certain context. However, I feel that Tsipras, who was the new leader that they elected, was way too weak. He kind of went back on what his promises were. Yeah, I remember that. They were fuming. Yeah. And I feel now they're just very despondent and they're just kind of used to it now. Yeah. It's quite sad. It's kind of come out the news cycle as well. Exactly. But I also think that this thing about austerity, okay, really, really needs to be looked at a little bit more in terms of actual numbers. People talk about austerity in the UK, right? Government spending has gone up year on year since 2008, right? Because people just hear cuts. They hear cuts. Relative to what the Labour government did, okay, yes, it's gone down because Labour spent so much. They were over the EU's spending limit. So you can't be pro-EU, okay, and then be anti some of their laws. And when, the next government has to cut back, you can't scream austerity because it's against EU regulations. It's against the EU regulations. Now, the EU are allowing France to do it at the moment, and I wonder why, because they fucking love France and Germany and Belgium because they're total wankers. But when you then see, okay, a chart of Greek government spending, it literally looks disgusting. It's gone down year on year, okay, but no one wants to cry austerity about that, okay? No one at all. It's the same with Italy. Right? No one wants to do these things over here. It's so fucking emotional and people don't like to look at fact at all. Okay, so when I hear about austerity here, yes, there's been cuts. Yes, certain issues are totally apparent here and I totally get that. But please stop being hypocritical. Right? Please. It's ridiculous. Do you think people are being hypocritical or they're just being ignorant? I don't care. Listen, okay. Hypocrisy and ignorance are kind of hand in hand, right? If you don't feel like going out and looking at the real issues out there, okay, but yet you want to have an argument about something that is closer to home, yet it's the same argument that is over there, but you support then that institution that is committing these things against them. What's the difference between the EU doing it to Greece and the Tories doing it to people here? Yeah. They're both abhorrent, okay? However, the facts are totally different in both situations. Yeah, I agree. I agree with you with that. Should I tell you one quick thing I hate? Yeah. When people say, "Oh, the magic money tree," people. Right. There's a thing called budgets, and every department has a budget. Exactly. So just because you heard they spent something, they just bought these new warships. There is a defense budget allocated for them to spend on defense. Anytime they spend money, don't mean they're just whipping money out of their pockets. Yeah. Sometimes, okay, cool, you're like thinking, I thought you guys didn't have enough money, but there's budgets for every single segment, sub-segment. You got education, you got welfare, you've got defense, you've got healthcare, all different types of different budgets.
Yeah.
So stop saying there's a magic money tree. There's different budgets for different things.
Yeah.
You know what I'm saying? So
there is one kind of counter to that though, and that does come from the central banks again. Okay, we were talking about inflation earlier and how inflation expectations are so low at the moment, which they're rock bottom. That's based on CPI though, which is obviously a basket of goods, goods for the everyday person.
Yeah.
If you look at the bond market, if you look at the stocks, if you look at housing, these asset prices are totally inflated, right? So that's where the real inflation is. Now note that people don't use RPI anymore as a measure.
Price index,
right? Why do you think that is? Because then that would be totally counter to what the Bank of England are trying to do.
Yeah.
They want to inflate this more. So if they actually see that the RPI is too high, which it fucking must be, because house prices are through the roof, and they're kind of dipping now, but that would mean they'd have to raise interest rates to get that rate of inflation back lower. That rate of inflation back lower.
Trying to look at the difference. No, keep talking. I'm just going to try and see what the...
But so there's inflation for asset holders, but not inflation for the little guy, which means that the Bank of England can keep lowering interest rates. And it's the same around the world. Fed, ECB, whatever. It doesn't matter which central bank it is. The Bank of Japan now owns 79% of the ETF market. So the exchange traded funds market.
Wait, what percentage?
79%.
What?
Yeah, it's crazy.
What?
Yeah, 79% of it.
Okay, so hold on.
So they're basically propping up the market themselves, just so investors don't lose confidence.
That's actually bonkers. Hold on. Okay, so CPI. I really should have got this before, but it's your fault for bringing it up. Zero price index 2019. Hold on, where is it? Just give me it in a chart. Okay, yeah. So obviously the RPI is considerably higher, like almost 2% higher.
Sorry. Here we go.
But where were we again?
It was 2% higher, did you say?
Yeah, like almost 2% higher.
Yeah. So the Bank of England's target rate of inflation is 2%.
Yeah.
So if it's 2% higher, then they'd have to raise interest rates. But they don't want to because they know that the asset prices are going up.
Yeah.
And that's what they want to do. They just want to keep inflating it. Because if they were to now raise interest rates to a certain point, it'd mean that all of their quantitative easing measures over the last 10 years would just go to fucking shit.
Quickly. Okay, let's just break some stuff out. So, interest rate, we know what that. Quantitative easing, explain to listeners what QE is.
So QE is basically the measure of a central bank buying specific assets in an economy to increase the money supply when interest rates can't really go any lower. So there's something called a liquidity trap, which means that if interest rates go too low, then there's no difference between holding bonds or cash. And that basically means that, there's no stimulation in the economy going on. They then tend to just go into the market, buy corporate debt. They might buy government bonds. They might buy loads of different stuff. Stocks even sometimes the Fed's been doing, and the Swiss National Bank. It's a different story. I won't talk about that now. It's a little bit complex. But they basically pump money in. But the funny thing about when a central bank buys government bonds is that they're essentially paying interest to the Treasury.
Yes.
So it's government debt cancelling when that bond rolls over. Or not rolls over, matures.
It's clever mathematics.
Yeah, I mean, it's total fucking bullshit.
So it's interesting because we've probably covered this like almost every pod we do. So when people talk about, the Tories said that they were going to cut the deficit, but a lot of it is from the central bank.
Yeah, it's all the central bank stuff. It's all central bank.
It's not like, the Tories are out here. Okay, cool. We're going to spend 500 billion on, I don't know what Tories like. I mean, you can't. And trucks.
The government, if the government were to kind of ask the central bank to spend money and then, to print money and then they go and spend it, then that would be highly inflationary. This is what MMTers want to do, modern monetary theorists want to do. And they're so fucking dangerous and delusional that I can't get my head around why I haven't blocked every single one of them on Twitter. But you know, if it does get through, which it never will because it's the most ridiculous idea ever, it will just cause Armageddon. But fuck them. One Armageddon and they won't be able to do it again, will they?
Yeah, it's true. But then you've got the blowbacks and the rest of everybody else, and who tends to bail out the institutions where they crash is always going to be the taxpayer, which is a massive kick in the teeth until we start complaining. Okay, I want to still talk about central banks. We want to talk about it. Okay, let's talk a bit about Brexit. How up to date are you with Brexit?
I don't really care anymore. I just want to leave, like, and just get.
Because I was thinking I haven't covered Brexit for a minute, yeah. And then all the people, like, obviously, you know, you have certain people in your timeline that might just tweet random shit. Some people tweet about sports. Some people tweet, like, even the people I follow, like from just finance world, nobody talks about Brexit anymore. It's boring. Everybody's got Brexit fatigue. Like,
it's like, just leave. Like, it's been fucking 3 years. People voted for it.
Yes, past 3 years. What, June 22nd?
29th.
Yeah. 2016. It's
3 years. Like,
what I don't understand is why everybody's so against a no deal exit.
Because they don't understand fucking anything. That's why.
I said, why is a no deal exit that bad?
Because, listen, in the government, okay, it's run by civil servants who, some of them might have EU pensions, some of them might, you know, be looking for a Brussels job or something like this. So they wouldn't want a no deal. Why would they? Which is fair play to them, but they're still cunts.
It's true, as I say, incentive drives behaviour.
There's some lords, right, sitting in the House of Lords that are on massive EU pensions. It's ridiculous.
Just the public sector pensions in themselves are nuts when you think about it.
Yeah.
That's why some people go into it.
Honestly, I think some of these people need to live in the real world a little bit more and actually go out and speak to people without, or, you know, just not be a politician for the whole of your fucking life and live in the Westminster bubble.
Yeah.
You know, I have absolutely nothing against people having different opinions, but when they're just totally devoid of any kind of rationale, or even a desire to understand a different point of view, or a want to, you know, let the public have what they voted for. You know, we didn't vote for a specific deal. On the ballot paper, it said, "Do you want to leave the EU or do you want to remain?"
It's pretty straightforward. A lot of people's arguments are people didn't really know what it meant. It's quite confusing. Should we do another referendum? What do you think about doing another referendum? If we did another referendum, what do you think will be the...
Why don't we go and have another vote on the Lib Dem and Tory coalition when Nick Clegg said that he would get all tuition fees gone.
Yeah, man. Do you know what, you man? I can't even lie. I'm just trying to be in power, so we're just going to spin around the block and reverse that. Not
that I, you know, agree with tuition fees going away, but why don't we go and have a vote on everything where a politician's lied?
Yeah.
You know, why don't we go back to 1992 when we didn't even have a vote in the fucking EU? Why don't we go back and vote on that? Which is pretty much what we've done. We didn't get a vote on Maastricht or anything like that.
It's mad. What the worst thing about what people are not really taking in about this Brexit process is that what everybody's deliberating now is just the divorce settlement, really, and what happens afterwards in terms of, okay, where do we go from now? It's still yet to come. So it's a proper royal F-up, really. And to the point where nobody even reports it anymore. That's mad. That's mad. 3 years, nobody reports on it. Like, we're still about. We're actually still about. But now, we have diminished sovereignty and power, because we're still technically within the EU, but we don't have the same type of sway. So what we do, we're just in like a limbo area. No man's land, just like back in the World Wars, no man's land. That's where we are now.
But at the same time, you know, I personally don't see the EU being able to last in its current form at all. And people might then say, oh yeah, won't we stay in reform? No, we've tried to reform many times.
Yeah, there's been so many different
and the EU just blows it back in your face, and they don't let you do what countries want. Remember what Guy Verhofstadt said, right? He said, why aren't these countries giving us their sovereignty? Like, it's a fucking country. You're a political bloc. You're not a country. You total wanker. Seriously, grinds my fucking tits up, man.
Yeah, speaking about sovereignty, so for example, in terms of, as you said at the top of the pod, it's really about centralizing power in Brussels, essentially. So when things was going tits up for Greece, usually when things go tits up in the country, central banks, again, back to them, they print money, try to get some stimulation. Greece couldn't do that because that decision is in Brussels.
Yeah, well, it's in Berlin at the ECB. But
ECB,
you know, they don't have countries in the Eurozone have their own central banks, but they don't have the capability to be able to control their own monetary policy, obviously, because they have euro, the euro currency, which is controlled by Mario Draghi and the governing council at the ECB.
Yeah.
Which is totally wrong because you can't match fiscal and monetary policy in
Exactly.
that way. So there's total misallocation of capital.
Yeah, stupid. Okay, so yeah, a bit depressing.
Is what it is.
Yeah, a bit of doomsday.
You know, there's who says that we aren't in a recession already? That's what I think. I think we're in the midst of one already, even though there's not GDP. There's not a GDP recession. There's a massive earnings recession at the moment.
Oh yeah, that's facts.
And you know, that's starting to show in a lot of the US firms at the moment, and also in Europe, especially with the banks. European banks are totally fucked. Mario Draghi said the other day, he was wondering as to why, as to whether negative interest rates would lessen bank profitability. Well, of course they fucking will. You can see it. You know, if you look at the Bund yields, they match Deutsche Bank's stock price perfectly.
That's mad. Deutsche Banks, for you don't know, have been...
And matches the euro dollar as well.
You said to me before the podcast you wanted to talk about, this is a quick segue from macroeconomic Armageddon into more positive, making money, being an online business. So, you are David, aka Mr. Macrodesiac.
Yeah.
So, from the comfort of your penthouse in Canary Wharf. No, he doesn't live in the penthouse in Canary Wharf. Before I get people trying to rob you. From the comfort of your lovely abode, you have been now, you have managed to monetize your following. You've always had a good following, even though the streets try to get you out of here a couple of times. Keep coming back, keep respawning. So explain to the listeners some of the things that you have done that's enabled you to monetize the platform that you managed to create for yourself.
I mean, I've always made sure that I'm not a pure finance speaker online. You know, I always make sure that I speak about different topics, but also give, in my view, pretty good insights into the markets and stuff. Because I think that if you're just a constant stream of just one type of content,
people get a bit bored.
You get so bored.
Yeah.
You know, and some people complain at me like that. They're like, "Oh, just do economic stuff," and I'm like, "No, that's not me."
Yeah, you want to talk about Man United?
I talk about whatever I want, and if you don't like it, you don't have to follow me.
Yeah, I hate when people try to say, "Just talk about this." Shut up, blood.
Go away, leave me alone.
Some person goes to me, "I prefer your economics tweets over your football tweets." Guess what? I prefer if you shut your mouth, you fat imbecile. Get out of here.
It's true though. But I've always written my ideas down. I've had a crap WordPress website before that I just did myself, and what was the other one? Blogger and stuff like that. But I've always made sure that
I know LinkedIn. You used to post quite a lot on LinkedIn.
Yeah, LinkedIn. I did a lot on. I've built a good network on LinkedIn in terms of people that I can just go for a drink with and just talk about the markets, or don't talk about the markets, whatever. But there's some of them are pretty high profile and they work in different banks and hedge funds and whatever. But I think it's all about being able to understand your audience and connect with them. If you have that, people trust you. And the second that you have someone's trust is when you're able to sell to them. That's the first bit, but then it's all about the results afterwards.
So then, stage one, develop trust.
Develop trust and develop an audience that, the smallest viable audience that you can sell to. So you're not looking to mass market anything. I'm not looking to mass market Macrodesiac. If I have 1,000 subscribers by the end of next year, I'll be fucking so happy.
If you have 1,000 by the next year, I am 100% robbing you. Because I know how much the thing is. I'm robbing you. I'm sorry. Okay, go on.
So it's all about finding that initial audience and really understanding the audience implicitly. So what they want,
how they want it,
and exactly how they want it, and also tweaking stuff as you go. But if you have that initial audience, you can sell anything. And look, I set it up with zero pounds. It's just the content that I had and the ability to write stuff and produce content that people trusted and could actually action ideas from. Now, you could probably do the same with, I don't know, selling anything. Like, as long as you honestly have that draw from a crowd.
Yeah, I'm doing this. I just need to get back together. I'm just been a bit of a lazy.
It's done, honestly. And all the other bits come after. You know, just do it. Like, if you have an idea,
execute
online, just do it. Just find a way just to get it started. Even if, you know, it doesn't work for a month, 2 months, just keep plugging away at it. I mean, for me, it worked for it straight away because I was very lucky that I had an audience straight away from my Twitter that did trust me.
Yeah, but you've earned that trust over the years.
Exactly, over.
So you always had similar screen names. So even if you lose your account, get it back up.
Yeah,
like, and people have actually seen you as somebody. Okay, cool. This person knows what the hell he's talking about.
Yeah, I like to think I do.
Yeah,
and I think that is where I've really built a lot.
Yeah, so that is where that is awareness. So yeah, definitely. Like, I want our generation to understand that. Yeah, when it comes to getting a property ladder, we are completely and utterly screwed. Like, everything's against us, and I've got a podcast on that, so check that out. But there is certain advantages of us being born in this era, is that with the ability to be online, literally, you can set up a shop on your phone. You can produce content on your phone, on your iPad, or whatever tablet or computer you have, and you don't have to open a shop. Because when you open a shop, especially in this place called London,
it's too expensive.
How much is it on average per square foot? I can't remember the top of my head,
but it's just ridiculous.
You know what I'm saying? So you don't have to have overhead costs. So currently your overhead cost is the same cost you'll be paying if you didn't do it, because you're paying for your internet.
I mean, I've got a marketing agency now.
Okay.
Pay each month.
Okay, you're coming up in the world. All right.
Yeah, which is still pretty hefty, but
yeah, but you need to know how to market though.
Well, I don't know how to market. All I know is how to do the content, and
that's yours. That's the same as me.
That's their speciality. I stick with mine. It's like cost savings almost. You know, if I tried to learn how to market and stuff,
it's inefficient.
I'd be wasting time on the content.
It's inefficient.
That's it.
That would be diseconomist as well. Like, yeah, you're 100% right. What would you say some of the bad practices you've seen for other people trying to establish or who already have like an online business platform?
Well, this is one from me personally, and it's providing discounts. I think that if you provide discounts, you sully your brand. And a few people did say to me, and I respected exactly what they said to me, and I took it on board. I haven't done it again. But I think that if there's constant discounts, and this is something that I was doing wrong, I think. Even though it did bring money in, I still think it kind of sullied what I was doing a little
prestige
bit.
Of what you're doing.
Rather than giving, you know, keeping it at full price and then providing like something free on top.
Yeah.
Rather than doing that, I was providing the discounts, and I think that is a big issue, especially with kind of like Instagram brands. You see like, 20% off, whatever. Yeah. But then if you see that every single week,
you gotta think, what's going on here?
Yeah, it's like it's not really a discount, is it? That's your full price.
Yeah,
you're just trying to kind of market it just to get me in. Do you know what I mean? Maybe as well bad customer service. I see a lot of issues with kind of Twitter brands and stuff like that. And there's complaints. You know, you never want a complaint online because the second that someone sees a complaint online, they're like, why?
Yeah.
Why am I going to go and then buy from you if this person didn't like it? And especially when I see people react badly to others.
Yeah.
Sometimes I call people a cunt. But I'm probably in my due right to, because they firstly haven't tried the product, but then they're slating me for it. It's like,
no, don't be taking those for piss. Yeah,
exactly. It's ridiculous. I mean, if you tried something and it's shit, then slate them.
Yeah, 100%.
But if you haven't tried it, don't slate someone. But I think customer service is a big one. I always make sure that I try to reply to emails literally in 15, 20 minutes. Like, it just pops up on your phone. Normally it's not a big issue, and you just do 1-2 lines and just make sure someone's happy.
Yeah.
But yeah, I think those two things, discounts and customer service, are two big issues that I see.
Yeah, I think obviously difficult because especially speaking to our demographic, people we know, we're all quite young and still learning. So you might have a talent where we're able to produce content or create a product or provide a service. We have the talent to actually, for the product, but the business services around it is where we probably lack, just due to experience.
Yeah, there's business acumen.
Yeah.
And I think it's almost like, don't run before you can walk. You know, take it a little bit slower.
Yeah.
Rather than really trying to dive in and just try and take over the whole world, you know. Find that small viable audience and then just hammer away at it and really, really find out what that key audience, what that smallest viable audience wants. What are their key issues? Because I'm sure there's more people out there with the same issues, and then you just keep finding them and keep churning and growing.
Yeah, I agree with that. Definitely, I think if you're definitely running a business, customer service is so important because we are, almost everybody I'll say will have at least one brand that they're loyal to. And that's because of good experience, good product or service. And when there's an issue, the way they're handled as well. So you have an issue with an Amazon delivery, it's handled sickly.
Yeah.
That's why I keep using Amazon. Had issues with eBay stuff. eBay was a bit, I stopped using eBay. PayPal, issues a bit, I avoid using PayPal now.
Yeah, I'm never using PayPal ever again.
Like, do you use them for a means to collect payments for your business?
Yeah, so I use Stripe mainly, but it's PayPal or just fucking.
PayPal has
blocked my account for
PayPal has done it to my boy when he had a book. He had his book was coming out, so he got mad orders because he's been working so hard. PayPal just F everything up.
It's ridiculous.
My brother had like a business on it, effed it up, and the influencers that are getting paid. I don't know what's wrong with them. I don't know what it is, but yeah, they don't have a very good reputation from me and the people that I know. Yeah, so customer service is really important. So when you have an issue, how you handle it, the speed you handle it, the manner you handle it, is so important. So if you're having issues, even if you think the person is maybe taking the biscuit, try to handle it the best way you possibly can. No, if they're being disrespectful, then I can understand people like you see sometimes like you call them a cunt. That's because they've asked for it. I don't believe the customer is always right if they're being a cunt. Like they can hold.
Customer's almost never right.
Yeah, that's the funniest thing. Do you know what I mean? So, but you just don't want, especially because we've seen so many people try to launch a platform, maybe be on Facebook, Instagram, Twitter, and they've had terrible customer service. They get branded an Instagram business or a Twitter business. You don't want it to happen to your own. No, so don't fall into the same traps as those people have. No. Be professional. Don't cut corners when you're doing stuff. Do you know what I mean? Be open. If there's an issue, be open.
That's exactly it. I agree.
Yeah, I agree with that. I'm not sure how much time we got left.
3 minutes.
Yeah, a few minutes. So, do you want to plug anything? Well, we've plugged Macrodesiac. Where can people find you on Twitter?
Macrodesiac _.
Macrodesiac _. And do you use any other LinkedIn or do you don't want it?
I use LinkedIn, just David Belle.
David Belle. Okay. And I'm surprised you don't have a podcast.
What's that?
I'm surprised you don't have a podcast.
I'm thinking about it. I'm not sure. It's just the monetization of it. That's what I look for straight away.
Yeah.
I have to find someone. I'm to be fair, I'm going to be starting at Core Finance doing videos.
Oh, is it?
Yeah, the week after next.
Oh, sweet. That's nice.
Called Macrodesiac as well.
Oh,
yeah, it's not my brand though, but yeah, it's going to be called that. So I'm just going to put that on video, on
nice.
newsletters and stuff like that.
Okay, well, that'll be a way if you still. We'll make sure to check that out. David, thanks again.
Nice one. Always a pleasure, Ayo.
Yeah, we'll probably link up again at some point in the future. Let's kind of start to each other now. Listeners, don't forget to check out Macrodesiac. Even if you're not willing to pay the subscription, think about it though.
Yeah, there's free stuff.
There's free stuff there, and definitely check out his Twitter and his. Even if there is a lot more technical than maybe my podcast, but trust me, you'll start to get the grips of it. It's definitely worth our information, and I'm sure you could tweet him, ask him questions. You could tweet me if you're very, very nice. Of course, make sure this is going to be on YouTube, so make sure you subscribe on YouTube. Like, come on, like, there's loads of you that subscribe to me on all platforms, and I've got like not enough YouTube subscribers. You lot taking the piss. So subscribe, yeah. Like, come on, don't leave your boy hanging. Subscribe on YouTube. What else? Obviously, Spotify, SoundCloud, Apple Podcasts, and also spread the word. Tell your friends about Macrodesiac. Tell your friends about DISUNOMICS. And until next week, peace. Welcome.